Hello, everyone, and welcome to another episode of the Nasdaq Spotlight. I'm your host, Jack Castle, and joining us today is the founder of Fly.io, Kurt Mackey. Kurt, thanks so much for joining us.
Thanks for having me.
Let's start off for the audience. Tell us a little bit about Fly.io and the problems you're solving for customers.
Sure. We are basically a developer-focused public cloud. It's kind of new for us to say that because we've been too small to be making that claim before. But the idea is that we think devs need a cloud that's built specifically for them, where they're the customer and they have kind of components that they can assemble into the apps that they want to be building without having to ask as much permission of platform teams, for example. And so we basically started by helping them run their applications all over the world, which was difficult prior to Fly.io, and now it's possible and it's interesting, and it actually works for a surprising number of applications.
Yeah, very interesting. And you've seen an influx of users moving over to the platform recently, and admittedly have had some issues with the platform, which is obviously a great problem to have. How are you and the team managing through that as you continue to scale?
Yeah, it's been a ride for the last 6 months, I think. And what's been interesting is there's been kind of outside factors that just drove a tremendous amount of growth. Heroku announced kind of the end of their free plans, which I think a lot of the internet took as Heroku is probably going away soon. It's funny you said good problem, because we've learned that good problems are also still very tiring problems, and so it's not always the most relaxing thing ever. I think we got, it's going to sound weird to say, we got lucky in some ways, because almost everything we ran into was sort of predictable. It's like a year and a half ago, if you'd said what's going to break and what's going to strain and what's going to really fail under load, it's basically what happened. And what we ended up doing then was actually starting a bunch of like fundamental architectural work that we sort of missed by like 2 months. It's like it wasn't quite ready when it needed to be, but it was ready basically in March. And so we had the luxury, I think, of being able to tell users, hey, like, we are aware of these problems. We understand what's happening. We're going to get past them. It's like normal growing pains. I know it sucks for you, and being kind of empathetic with them, I think. And then knowing that it actually was going to get better. I think it would have been a much more difficult problem if we'd been stuck, for example, if it had been like completely unexpected. And there were a lot of surprises and a lot of on the fly adaptation that went on, but it's so much as company's luck. I think that's probably true for all companies, but even the bad things, when they go well, it's a big luck component.
Yeah, well said, and really kind of that growth mindset, learning from it all. Is a free plan still part of your roadmap going forward?
It is. I think one of the important parts about developer-focused tools, especially in 2023, I built a developer-focused company in 2011. It was a slightly different thing. People were very excited and they just use anything. And now they have a kind of a ton of options for where to deploy a little side project. And I actually think you win developers with their side projects. And then if you're lucky, they take you to work with them. And the free plan is an important component of that. If you think about it in terms of friction for users getting going, asking for money is a big friction point for something that they don't even know if it works yet. I think the interesting challenge for free compute services is that it makes sense as part of a sales funnel. It makes sense as like an acquisition tool for people who actually convert. One of the things we found with generic infrastructure is a lot of free users just want to run a VM somewhere. They're not actually buying into the product. They're just like, oh, there's a free computer somewhere in the world that I can run my stuff on. And I think that the balance for us is figuring out ways to attract people that would pay if they were successful with the platform, and not actually kind of build a bunch of infrastructure for people that just want to run a CPU somewhere and don't particularly care about the product otherwise. And so that it'll evolve, because that's the intent of it. But I think the free tier is an important part of the way we attract developers.
Yeah, it's a great strategy. And maybe pivoting off that from a strategic perspective, we've seen a lot this year around AI. And I just wanted to ask, how do you see the growth of AI impacting your business going forward?
We have a kind of a strong take on it. So we're shipping GPUs soon. I think the generative AI in particular it's like a novel new primitive for people to build applications on top of, like databases were, or like Twilio was with voice. And so I think our kind of goal in life is to deliver the infrastructure people need to run, like kind of build AI into their applications. And starting with GPUs makes obvious sense. Like a lot of what we're hearing from customers is just give me a GPU with kind of the same user experience you have for everything else, and off you go. I think there's probably more interesting takes we could have, and I expect we'll figure that out this year. But I've been impressed basically about what we've seen with devs running AI tools. We've seen like a huge flood of applications just using ChatGPT, doing all kinds of amazing stuff that I hadn't considered before. I actually have a customer running an app now where they're doing generative full stack development, and basically they're using kind of a large language model to generate applications and then run them on the platform. And so it's we might have lucked out again, basically.
Very cool. So one last question for you. You know, as a founder yourself, I'd love to get maybe a piece of advice you'd have for other entrepreneurs or founders tuning into this episode today, especially given today's current climate.
Yeah. Boy, that's a good one. I one of the things that, if this company gets big, I think one of the things that we did right was we actually we created and threw out 3 entirely different products that really weren't getting us to where we wanted to go. And I think that we might have been unusually comfortable with just tossing things that weren't doing what we needed. And I think we did that at a pace that kept us alive and kept us sort of energized. And I think that in a lot of ways, it's a problem of managing your own emotional state when you're doing something like that. And so it became a pattern of find the thing that makes you excited and then test it out. And then if you're not excited, do it again. I think that's maybe a thing you could practice. It's I said we lucked out several times, but at the same time we killed a product that actually had $1 million of ARR because it just wasn't doing what we wanted. And so it's I think for particularly a startup with VC backing, it's the bold bet things that make you feel really good.
Yeah, well said and great perspective. So appreciate that. Well, Kurt, thank you so much for joining us today, and congratulations again on not only the success, but being selected to the Enterprise Tech 30 list this year.
Yeah, thanks a lot for having me.